Good day, folks. This is Chris Teron again, founder of TradeTaxPlus Center of Excellence. This is our second set of videos for June 2017. Before we get to the videos itself, the draft legislation has just come out yesterday, so just maybe one or two comments around the draft legislation dealing with VAT. Only two major changes that we need to be aware of. The one deals with VAT on low-cost housing. Now, there was an issue in the past, and there was a court case dealing with that in terms of what exactly is zero rated and in whose hands is it zero rated. Now, what they've done now, they've clarified that in the legislation, but what they've also said is if assessments have been raised in the past incorrectly, or you've charged VAT incorrectly, in other words, you've paid VAT at 14% where it should have been at 0%, or SARS have raised assessments at 14% where now it should have been 0%, and those assessments were paid, SARS will not refund you. So as far as the past is concerned, that's just gone. You can't go back and claim it. The other issue that's come out of that is if you have been assessed, you can now object against those assessments, but the assessment or the revised assessment can't give rise to a refund from SARS. So it seems like in both ways, the taxpayers are really left high and dry in terms of as far as the past is concerned. The other major issue that's come out of this is the treatment of VAT on leasehold improvements. That's where a lessee erects leasehold improvements on the premises of a lessor. Now, that was always an issue from a VAT perspective. Is there a supply by the lessee to the lessor and so forth and so on? Detailed legislation has come out. The wording is absolutely obscure. There's still a lot of work that needs to be done to sort out the actual wording of the legislation. But the gist of it is that there is no VAT liability in the hands of the lessee, but there will be a VAT liability in the hands of the lessor to the extent that the lessor will be using those leasehold improvements in the future for non-taxable supplies. So just as a simple example, if I build a shopping complex on your me being the lessor, you being the lessee, you being the lessor. If I build a shopping center on your premises or on your land, and maybe the top of the development is a penthouse or something. Now, the renting out of the penthouse would be exempt from VAT. The renting out of the shops would be taxable. Under those circumstances, the lessor, the person that ultimately owns the property, will be required to account for output tax on a value to be determined in terms of in our example, the property that's going to be rented out for residential accommodation, which is the penthouse. The rest basically falls away from a VAT perspective. Okay, so that gives you an indication of what's happening there. A few other minor changes, nothing too significant. Just as far as the videos that will follow this is concerned, there will be 3 videos. We'll be dealing with specific topics this time around. The first video will be dealing with what is the nature of consideration, specifically where you have joint business ventures. The second one will deal with what is the nature of grants and when is a grant a grant. Then we'll deal with spouses married in community of property. We consistently get questions around that. We'll share a little bit more around what the rules are, but more specifically, we'll deal with what is the issue where a spouse erects a house for business purposes, one spouse being VAT registered. Is that leasehold improvements, as we've just discussed? Does it get impacted by the amended rules? So I hope you enjoy the videos. Give us some feedback in terms of whether it's valuable, or do you want it in a different format? Does it work for you? You will also be able to find these videos, of course, on our website directly now. So you can go to our website and have a look at the videos there. Other than that, enjoy the videos. Chris Teron checking out for TradeTaxPlus Center of Excellence.